Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. It is Friday, and we have so much to talk about. Yesterday, after the stream, in the later market hours, just some really crazy stuff happened, and long story short, interest rates are substantially higher today. Well, they're about 10 basis points higher today. Oh, first, there you go, Uzi. You should always be first, I would think. So I'm glad to see that. Okay, let's come over to the charts and let me try to explain what happened yesterday. And I'm going to try and do this more sequentially rather than by instrument like I usually do. So, like, the first thing that I just want to note is that we zoom in here. The equity market was up overnight and pretty much immediately sold off on the open. Okay. But treasuries were doing okay. You come over here. They were up. They were a little bit up, and then they faltered a little bit. But they were doing okay from the open, and we got some range bound action. Okay, then the 30-year bond auction came along, and it was bad, and I mean it was so bad. Like, the dealers ended up taking like twice what they usually do. And it was, in the 30-year, the largest spike since basically the pandemic. So this was a wild move, okay? Then, later in the day, and you really see this more in the equities, Jerome Powell came in and, he was at a conference, and he was a little hawkish. And so all of this, we've got a pretty big rally that happened in the S&P 500 in particular that was based off of, we are end of the cycle. The Federal Reserve is starting to be easy and everything. And, we rallied. And then, of course, the problem becomes, but then the reason that we were in this good spot was because the market did the tightening for them. And now you're undoing that tightening. How does that work? Right? It's going to come back. So, but I actually, let me go through these other instruments really quickly. You got oil still down there, gold and silver getting pummeled off of that, copper still languishing as well. When we go into the currencies, we're going to see Bitcoin had some jumps yesterday, but they also got savaged by all of this not nonsense, but craziness. And the dollar is a little bit higher this morning. Not as big of a move in the dollar as I would have expected. Okay, so Jerome Powell coming out and kind of pushing back against this easing, I think that was kind of expected. I really was like, hey, this can't go on because you're undoing everything that was kind of putting us in a good spot, right? But the 30-year bond auction is extremely alarming to me. It is very alarming to me. And because the whole issue has been, okay, we had the refunding announcement. It wasn't bad as we thought, but it's still kind of bad. And when you go into the crosstabs, it kind of looks bad, but the market was like ignoring that. Okay, let's come in and see how the market starts reacting to when we're putting the supply out there, and it's still too much. It's still too much. The market cannot absorb this supply. And basically what happened is they kind of tricked us. They put all of their money into buying the 10-year auction, and then there was nothing for the 30-year, right? So this is a very, very big problem. And I don't, this puts doomsday scenarios back on the table for me. right? When we were at 5%, you know, we were starting to look at the things where, like, what if the cheapest to deliver futures changed, and that could create more selling, and this could put more pressure on regional banks. Like, it turns into a situation that could very, very quickly turn into breaking something. So that auction really has me bearish on treasuries for the near foreseeable future. You shared a link? Let me see. You should have permissions to post stuff. I don't know why Discord is not doing the thing that, you know, shows you what the tweet was. I'm wondering if Discord has decided to become anti-Twitter or something. Like, this is really weird, right? But you definitely have the permissions. I was the same thing. I posted a link that was basically somebody saying, what was it? It was Eric Wallerstein says that dealers covered a fourth of the auction, more than 2 times the average takedown. I was like, whoa. Okay, but it didn't embed it. What's with that? But Discord has been having problems. I had Discord keeps crashing on me, so it might just be a temporary thing. Okay, what's this guy? Squeeze Metrics. This usually hasn't been worth mentioning, but right now there's actually quite a lot of dealer long gamma in SPX right at and above spot. Yes. This is why volatility got pulled in quickly and tight on this rally, and it's why you're seeing some auto dip buying like the old days. Yes. And this is also why that treasury auction just bombed and sent TLT down 2.62 on the day, but correlated as so he's just saying, okay, how is it that this just absolutely demolished treasuries and the S&P 500 is not that damaged? But I don't know. I would say, when I look at that chart, that is a lot of damage. I think that he might have posted that kind of a little bit too early, you know? But I think that the big move was really more like after Powell started speaking. Yes, and in fact it was. When I'm looking at like when this move really started, it was after Squeeze Metrics posted that. That's funny. But it is very important to note in the S&P 500 that we do have long dealer gamma, yes. And that tends to result in buy the dip type behavior. Well, so with all that said, I'm concerned about interest rates heading back to 5%. But for today, on Friday, well, I was kind of, when I was thinking about it last night, I was remembering past Fridays where we kind of came in like the Thursday was bad, and it was like, what will happen? And I didn't really want to play it because it was already down a lot and everything, and then they just kept going, right? You remember that? They just kept going, and I sat on it because it was a Friday, and I was like, I don't really like Fridays. So I was kind of coming in here thinking, we could be active today. This could be one of those rare Fridays where I really have good reason to try and do stuff. But coming in and looking at it, the action since the open has been extremely lackluster. There's not that much volume going through. They are retracing a lot of the downside action that we saw in the overnights. So it looks like the treasuries are somewhat sanguine about it. I don't know, how do you say that word? It doesn't look like they're turning into all out selling here, and we are below 4.6. So it kind of suggests to me, if I can come back to the treasuries here, right? Okay, so they are trying to pull out of this hole. We'll see. I mean, if they do get a run, I think that they might get up to 28, and there's there's a tendency to kind of roll into those single prints sometimes. I don't know what that is or what you can prove with that, but that's just kind of the benchmark that I always use. 28, you might start to see some resistance. So like, the upside is probably capped, is what I'm saying. But You know, if we're going to go back down to like some of these October levels, I think that it might have to happen as like a death by 100 cuts sort of a thing. Like, it's not going to all happen in one day. I hope not, at least. I mean, I guess I hope it would happen all in one day, because I could go long rates and it could go all the way back. That would be an awesome trade. But I'm thinking that it might take a few days and that it's just gonna kind of slump a little bit lower as the market slowly realizes that the fiscal situation is now having a measurable impact on the treasury market. And another thing that I need to point out is that the liquidity metrics do not look very good. So when I look at resting liquidity on the treasuries, it's not bad. But when you look at how much actually trades and some of these other measures of treasury liquidity, all suggest that the market is very illiquid. And that's probably why after that poor auction, things moved so much. Good morning, Dan. Let's see, who else we got? Yeah, James pointing out the 30-year bond. Trying to beat me to it, James. James, you got to stay with the rest of the class. Don't try and get ahead. Walter Brando. Now, there's something else that happened yesterday that's very, very important and we need to talk about. Hold on a second. I need to pull it up here. Okay, so yesterday, Jerome Powell had his opening remarks, and yeah, here, just watch.
Quarters, of course.
Jerome Powell, by refusing to treat climate change like a systemic risk,
Thank you.
you are putting us at
Thank you very much.
economic disaster.
Thank you very much.
Climate change
Yep.
will threaten
Thank you.
Thank you.
Close this fucking door. Close it up.
Oh my gosh, guys. Can you believe? Listen, he must be having a hard week, okay? Like, that is one of the most just absent-minded hot mic moments I think I've ever seen. Close the effing door. Like, that's the new meme. That is just a thank you and close the fucking door. Just close the fucking door. We're gonna say it all the time now. Although I won't swear. I'll say effing. We're trying to keep it kid friendly to some extent. You remember this whole thing like at the beginning of the year when I was like, let's make a tier list for Federal Reserve presidents. And we're like, I don't think I can put Powell in S tier yet. Like, he's either like S tier or like D tier, right? But if he's able to pull off this soft landing stuff, maybe he's an S tier Federal Reserve president, right? Well, he's an S tier Federal Reserve president now, man. Like, how do you beat that? The legend. He is an absolute legend now. When I think Federal Reserve President, I used to always think of Alan Greenspan because he was the federal when I was a kid. I remember him as a kid and like that. Okay, but now, how do you beat that? Just all other Janet Yellen. Everybody loved Yellen, you know, because she just gave all of the money. But you just can't beat that. Close the effing door. He didn't mention anything about it when he restarted either. Yeah, I bet. So pretty funny. Is that the first time that he's been interrupted at something like that? I don't. Didn't handle it very well. Yeah. The committee is monitoring the situation closely and will consider whether further F-bombs are appropriate. Yeah. I sure need to learn more about treasuries. You know what, Raymond? I love it. It's like among normal people, interest rates and the treasury market and the monetary system is just about the driest topic you could possibly come up with, right? But to me, it's there's just infinitely interesting because there's always more to know about it. You ever get into something, it's like you're into it and you're digging and you're getting all the dopamine from it, and then you just kind of burn out and then you're not interested in that subject anymore. I do that a lot because that's kind of an ADHD thing, is you get a hyper interest for a little while and then you get bored of it and you move on to something else. But the treasury market in particular is one that you can just keep digging. Like there's just so much that you can possibly know, and it's always constantly changing. And so the market in general, but I think the treasuries in particular, are just an infinite source of interesting things to learn. And the thing that is great about the treasuries is that the amount of information that we have available to us as regular people is a lot better. What I always find when I'm, studying equities is there's usually there's this unknown, Like I remember this with GameStop. It was like, okay, like how many shorts are there? Have they covered? How does this metric work? How accurate is it? All of this sort of stuff. Is this accurate or not? Because they came out and said, oh, shorts reduced, but then people called into question the metric and stuff. And, there's this one piece of information we don't have. And like everything hinges on that one piece of information. But the treasury market, because interest rates are relevant to the whole market, but it's just kind of like the base environment that they work in, that makes this information more available to us as retail traders than it is in other markets, right? In stocks, there is a lot of information about individual stocks that only insiders would have, and that are very difficult for you to come across. Some, if you can read a lot of analysts, like professional analyst reports, maybe you can get in the know on some individual stocks and really know about where that stock is going. But I feel like that your ability to know where things are going in the treasury market in particular are really good, right? Because these Federal Reserve members are speaking all the time. You can go and read what they're saying. The whole market reports on what's going on. And that's what I love so much about it. I think that, part of what the way that I got started in trading was because I was so into politics. I was so into politics because that was the era when it was like Politico was growing and stuff like that. We regular people had access to insider political knowledge that you didn't get before, that you don't get on the news, on network news. And, so moving over to finance was kind of a natural shift. Now, when I first went into it, I was totally technicals. I understand when I first started, I thought, I'm just going to read the technical analysis of stock trends and we'll be fine. I very quickly learned that was not how it works. Excuse me. The average age for a U.S. Congress member is 58 years old, and the average senator is 64 years old. The White House has a retirement home. Oosh. Are you trying to get me off into a tangent? You know that I'm not. That I'm just going to completely shift gears. This is one of the things that I know is unpopular. Like, people disagree with me, but that's why I got to talk about it, because I got to convince you guys of these things if we're going to fix some of these problems. Okay, it is too hard to be a senator. Like, they don't pay you enough. They don't pay you enough. Like, they say it's like, what is it, $250,000 a year or something like that? I think that they should get paid double that. No joke. I'm not even kidding. I think that Congress should get paid double that. Okay, first of all, what you're paying Congress is like pretty insignificant compared to all these other things that we're paying for, right? And what we need to have is we need to have a world where anybody can run for office. Okay? The way that it is right now, you basically don't stand a chance unless you're independently wealthy. Because how are you going to live? How are you going to live and you have to basically spend all your time fundraising? And the media exposure is like everything now. You have to have like name recognition. That's the thing that wins elections right now. And so it's basically the only people that can afford to go into Congress are rich people that are independently wealthy, that have FU money. And most of those people are in their 50s and 60s. Yeah, and then on top of that, they stay too long. Probably shouldn't be. I think that there should be like an age limit of like 72, or like should have a test or something. And because it's good to have people that have been in Congress for a really long time. I don't agree with this whole like you should only serve 2 terms and then you should be out. You want legislators that know, because it's a skill. It takes a long time for them to figure it out. Okay, it's a skill. So you need people that have been in there. But, you know, that means that you want to get people that are like my age, right? Like, this just goes... My calling in life is not to be a politician, okay? I thought that maybe I wanted to be like one of the people behind the scenes, right? Not the politician, but the guy that they're strategizing with and giving them data. I'm very good at that. I'm very good at... What is like the true skill that I have? It's getting all of this data together and then giving it to you in a way that's the most useful to you and filtering it all out for you, right? So I can be a big asset to politicians, and I've done that in the past. But with the way that the politics are in this country right now, I have zero interest in going into that world now. Zero interest. You would, you know, if there was this thing where the people in Utah were asking Curtis to run again. I don't know why, but because I didn't really like him, but whatever. The people were putting advertisements on TV saying, Seth, you should run for Senate. I wouldn't do it. There's no way I would do it. There's no way to do it. I don't need to deal with that crap. It's a total mess. And that's the whole thing, is that what we would want to have is people like me in my 30s, or frankly, Ocasio-Cortez is maybe, you know, she's one that is doing that. But I think that you want more people that are like in their 30s getting into Congress, because so that they can like develop the experience and stuff. Yeah, Dianne Feinstein might have stayed a little bit too long. Yeah. Well, and that's the other side of it, which is that this idea that like Congress or the decisions that Dianne Feinstein is making are compromised because she's too old is actually not entirely accurate, because the reality is that Congress people are not actually people. They're actually a collection of interests with a staff behind them, right? And so basically their staff can run everything and be making all of the decisions, and all Dianne has to do is just do what they tell her to do. And you think that it's like, well, okay, yeah, that's what's happening with Dianne, but that's what's happening with the majority of elected officials, to be honest with you. Because what happens, especially as you get older, like seriously, there's just too many issues. Essentially, there's too many issues for you to be an expert on every single one, and so you have to rely on other people to some extent to help you make decisions. You have to have staff that are looking at them and you know, based on your principles and your guidance, telling you what you would have done if you had done all of the research and reading it. You know? I thought you were gonna say there were aliens. Oh, come on. Okay, so far the action has been pretty gentle, but there does appear to be a slight upside bias to the flows. Given everything else that's been going on and kind of the flows that I'm focused on, I have no interest in trying to follow the long. But I'm not very confident that we'll actually have an opportunity to go for shorts today. So I think that we might be able to relax a little bit. Oh, politics. It's kind of rough. Like one of the things that I'm noticing in myself right now is that, like, I really despise what Vivek Ramaswamy is saying, because what Vivek Ramaswamy was saying in the debate is like, hey, this is the way that you become popular, is you come out and you say the most bombastic, crazy things, and the media just eats it up. You need to get that one little moment that gets you on TV and everything, and that's how you do. And that's what he's done his whole life, basically, right? That's how he became a billionaire, wasn't it? By actually providing value, because the company that he put together was a complete bust, right? But he was able to sell it before that happened, right? By saying some of the craziest things, like billing it as like the most amazing thing to ever happen ever. So I get why he would say that, but I'm kind of sick of that. I kind of feel like that's the world that we've been in since like 2008, and I'm sick of it. I want to be serious again. But then at the same time, you know, Jerome Powell saying close the effing door is so effing hilarious, and I just love it. Like, so I'm just as guilty as everybody else, aren't I? I'm just as guilty as everybody else. What do you do about it? Yeah, there needs to be a new... We need a new lifeline. We need a new social media platform. The problem is that whatever new social media platform is going to come it just ends up being far left, Silicon Valley, dummy heads that are just trying to recreate Twitter. Ugh. I hate Twitter. Like, I'm on Twitter. I probably use it more than every other platform. I probably support Twitter more than any other platform right now because of the whole free speech thing. Well, and YouTube. I really like YouTube. YouTube is like the one place where I feel like that they actually consider their creators and stuff like that. But anyways, but I just don't do well on Twitter. I don't participate on there. I think it's stupid. And they're basically trying to recreate Twitter. When I think that what we need to have is we need to have platforms that are focused on deeper interactions with smaller groups of people. Yeah. Well, the big one is Threads, right? The far left people are still pushing Threads, which I think is funny, right? Because they hate Zuckerberg, right? But so it's pretty. Well, so yeah, this is a weird thing. So, because there's been a lot of articles about this week, like on Wired and stuff like that. Basically, it's like all of a sudden they've realized social media is dead. Okay, the big tell. I've been saying this a lot, but the big tell on those articles is that they think that social media died in 2023. Okay, because for most people, Facebook died in like 2014. Okay, because what happened was people they added the Twitter. So like the whole thing was there was Facebook and you could just poke people and post pictures, right? And then Twitter came along And Twitter was taking off in microblogging. They called it microblogging at the time, right? And so Facebook said, oh, we need to be more like Twitter. And I was super excited about that. So now you got your Facebook feed. And I like that because I had never had success with Twitter. And so I'm like, oh, I'm going to build up my Facebook and I'm going to use that to push my music or whatever the deal is, right? And basically what happened a few years after that was people started to have big time success promoting themselves on Facebook. Like if I wanted to do a party, if I wanted to do a rave, all I had to do was find a venue and then create the Facebook event and just start mass inviting people to the Facebook event. And then those people would invite other people to the event, and then everybody in the community that was interested in that event would get invited to it. And you could organize things like that, right? No, that's no good. That's no good, says Facebook, because you need to pay us money for you to do that. And so they throttled everyone and they changed the way that events worked, essentially, and ruined it. And at that point, the only thing it was good for was to try and hawk your political opinion at your friends. So 2016 comes along. And then we get the disaster that it was, and that then people really turned against Facebook. So the reality is that social media, the golden age of social media, has been dead for almost a decade. But they didn't realize that because these tech writer people were the ones that had, 1 million followers on Twitter, and ergo they didn't experience that until this year, right? And they complain about what Twitter just isn't what it was, or talk about like the bots and the harm content and things like that. But I don't ever see that stuff. There's these complaints that the harm content has gone up, but Elon Musk says that it's gone down, that their metrics show that has gone down. So I don't know. It probably doesn't matter, because the reality is that a lot of lefties left it simply because Elon Musk took over, and if your friends aren't posting there anymore, then it's not going to be very interesting to you. And some of them have tried to make a home in Threads, but it's just not going. It's just not going. Like, pretty much people tried it and then was like, this is dumb. Threads certainly is not suitable for us because you don't get live feed content. Can't remember who it was. I think it was Futures Trader 71 that was trying to do more stuff on Threads than on Twitter, and I was just like, well, Threads is unsuitable for retail trading. Of course, the only thing that makes Twitter suitable for traders is TweetDeck, and you basically have to pay for it now, so Discords will become more important. I think that a lot of people are moving towards private chats, Discord servers, etc., right? But that's exactly what I'm saying, right? Deeper interactions with a smaller group of people. But need new ways to grow platform anyways. Yeah. I would like to see social networks based more on collaboration. You get what I mean? Like, you come in and you make some art tool. Like, maybe it's a Photoshop clone, right? But it's a Photoshop clone, but it's a game where I draw something and you draw something, and I have like a limited amount of ink that I can use or something like that. And then other people come behind and complete the work. Like, those are the places that I think that if I was trying to make an app that I would be going, is doing things that encourage collaboration, like gamifying collaboration and or gamifying meeting in person, right? Billionaires know how to expand to social media. Well, but I think that part of the problem is that the existing social media companies have become so entrenched now that it's hard to displace them, right? Because in the beginning days, like when it was Friendster, MySpace, and Facebook, right? MySpace died pretty quickly. Facebook took over pretty quickly, or like Reddit fell, or sorry, Dig fell and Reddit took over, for instance. Those things happened very quickly, and you're able to supplant that platform, and everybody moves over to that new platform really quickly, right? But there was two things that were different. One was that interest rates were low, and so it was really easy to do a startup and create just about anything. And two, it just wasn't entrenched yet. It was a new thing, and so people were very willing to try the new stuff. Now it's become so entrenched that I feel like it's just too hard. Like if you want to replace Facebook, because so many people have tried, right? And none of them have been like a company. No, so they're always trying to do it in a decentralized way, because basically that's the only way they can bootstrap it now. It's too hard to get the cash otherwise. There's true false. Yeah. See, one of the issues is that like the way that we gamified social media was basically in upvoting or downvoting what content got shown, and that basically turned into a political mess, right? It basically encouraged people to be oppositional instead of collaborative. So we need to make tools that encourage people to be collaborative. I feel like that what we have on this stream is collaborative, right? If without you guys in chat, this would be pretty stupid. If I didn't have comments to go off of and to see what you guys are interested in talking about, and the extra information that you guys are giving us, and the things that you'll tell me off stream, and it's a very valuable thing. That's what makes us valuable, is the collaboration of us working together as a team. And I want to see more of that. I want to see better tools for that. One tool that we have for that I think works, that seems really cool, is the Stages feature of Discord, but we just never take advantage of it. I need to do like a Sunday thing. I just got to pick the time and start doing it, maybe. Yeah. By the way, good morning, Guy Man. Yeah, True Social. So, you just remind me, Dan, with the True Social thing about how, when that happened and they said, oh, we're going to make a company and we're going to take it public through a SPAC, right? I saw that and I immediately went out and bought that SPAC and made a pretty good bundle of money from it, right? And then the next day, it was like he picked what was his name? Is that senator that was really loyal to him, but never been a CEO or anything. And so he picked them, and I was like, oh, they're not actually serious. And I got out. And it's that SPAC has been like a disaster ever since, man. It's like wild story. And then the other big thing that when I was really like, yeah, okay, is that it took them a couple of months in order to even have an app. And then when it came out, it was only on the iPhone. That's so dumb, guys. This should become a standard, because I don't get where these people in Silicon Valley and at businesses think that it's like, we just need to have just focus on the iPhone app. And then no, because all of this stuff is done with web underneath. These phone apps are almost always just a shell over top of a JavaScript application. So there's no reason that you should not have an Apple, an Android, and a desktop application. And if all you can do is the Apple application, then you probably did a crap job. You probably have bad engineers, right? And I think that's probably the case with True Social. They've got you'd have to have reasonably decent site reliability engineers behind it to keep things up. I mean, that's been one of Twitter's struggles, but yeah, I think that True Social is a dud. Then on top of that, just to be frank, I'm a conservative, so it really pains me to say this, but conservative social networks suck, man. Like, you go on True Social and it's all just far right agitators. It's boring to read that crap. Yeah, and the Android you shouldn't. Well, I mean, there might be a little bit different because in the Android UI you have a back button, but yeah. But it's back to, like, you know, there's lots of things that people do, right? And those are the things that people will want to interact with in their social network, right? Like, Discord is so great because it enables collaboration and, you know, like, gaming together. You can create a server, you can see who's playing what, and get together and play games together and voice chat. I mean, it had a really key use case. It was kind of like the primary use case was voice chat, and it kind of expanded to become a whole social networking tool for communities. It's brilliant. Okay, where is that tool for music and for making pictures and for making new websites or services and for selling your own stuff? Is it like a collaborative Etsy? Like, it's just... Okay, so I watched the order flow playlist and I really think it's useful information. I've changed my trading style so that I'm using order flow and looking at the news as a whole and forming a bias. There you go. Well, so since you're only come in recently here, we should go back through what we got today, right? Because yesterday we had a really bad 30-year bond auction that suggests that the market is not able to absorb the new treasury issuance that comes through. So basically, demand cannot keep up with excessive supply coming from the government. And then Powell came in and was a little bit hawkish on rates. So that brought in some really, really big selling flows yesterday. But for now, it's a Friday, we're mean reverting, and the tendency is that Tuesday, Wednesday, Thursday are the more active days of the week. No news Fridays can be a little quiet sometimes. So yeah, we've moved up, but it's been pretty gentle, and the order flow that we've seen, well, I guess when we decided to break above 26, there actually was a decent amount of volume that flooded in. So, but as of so far, what the heck is that? Anyways, so far I haven't been too enthralled with the flow that I'm seeing come through. So, but still kind of on the lookout because we could see some sell come through. So that's kind of the approach. I think one of the things that really helps with our approach, with our model, is it really keeps you out of the market when there's no reason to be in it, right? Like, I used to overtrade so much, and now I think my problem is more that I'm not aggressive enough sometimes. Yeah, come fafa. Well, Komoia Fafa? I don't know how you're supposed to say that. The series that Guyman is talking about is if you go to my main channel page and there's an order flow video series of about 6 videos, and you watch those. And once you've watched those videos, so I think the thing that I was saying to Guyman was, like, once you've done that, you'll have a really clear idea where to go, right? And now you probably should, right? There's 2 parts. One is you just got to get the screen time of watching the order flow and kind of understanding how your instrument tends to move and how the volume tends to behave in, or, you know, like, it's kind of like the pace of it, like how much is a lot of volume at a price, what is a significant amount of pulling or whatever the thing is, right? And then watching the news and the things when you see a move, trying to say, okay, what flow drove that? Was it news? Was it some sort of index fund strategy? What you know, if you read Zero Hedge and CNBC, and you can often sort these things out, right? And then looking for other things that would potentially predict those orders, right? Because there's just like, there's so many, and any one of them could be a little study to go in and say, okay, when X thing happens, what volume do I get in the market? And you can study it and find predictors of order flow. And now you have a framework where not only do you kind of have a model about how to approach trading, right? But it also gives you guidance on where to direct your research, right? Because that model that I've given you, that's not the whole edge, right? That the edge is continually going out and researching and finding the things in that particular market at that particular time that are going to best predict the orders. So yeah, go watch those videos. So that was just me monologuing for like 30 minutes. TLT close above 8750 is optimal for dealers. So maybe the most dominant factor today is the options, huh? Probably the case. Might need to have TLT open here. I'm going to check on a few things here. Do I have my financial juice open? Oh, I don't. Okay. I was like, I haven't heard anything from him. Also want to check my memory footprint here. Oh. That's interesting. The tab for, you know, like watching the lives, like my little control panel thing in YouTube uses a ton of memory. Wonder if I should just close it. I mean, I guess I don't ever look at the number of viewers sort of stuff, and I can see the chat over here pretty okay. The only thing is it's kind of a little hard to see. Do it like that. Okay. I'm going to try closing that and seeing. Okay. I mean, I probably have enough memory anyways, but yesterday I did experience a few little hitches that made me go, maybe I need to do something about that. Okay, I'm using 45%. I think we're okay. Should probably also get like a more content creator focused audio card controller type thing so that I don't have to use voice meter anymore. I don't really want to spend on that right now though. I guess that'll be my next project. Okay, but anyways, I need to come over to, okay, so now that I know that I have my new squawk going, I come over here to Twitter and just scroll down here. Huh. Nassim Taleb quoting somebody, "We're likely now in a brief Goldilocks zone and no one expects it. More squeeze and blow off in risk assets," which I've been writing and saying for a year. Then Papa Bear shows up and it will be too late to react. Yeah. Oh, is Nassim Taleb going full pro-Palestinian here on Twitter? I'm never surprised that apartheid propagandists can be heartless, vile, and execrable. Listen, here's the reality is with that situation is that there is no way to resolve that situation compassionately. There's going to have to be a lot of pain to resolve that situation. That's basically where it's gotten to. I don't know. It's still the same thing. Like, I guess Twitter is just not as big of a thing. I don't see as much there. Yeah, the web browser just uses so much memory. It's pretty ridiculous, man. That it's like the more memory the computers get, because basically what happens is here's what's happening is the people that make the web browsers say, well, the primary thing that people do with their computer is browse the web, so it's totally okay that we're using all of the memory. What else are they using it for? Sort of a thing, right? And the result is that they're no longer really making web browsers performant. It was even like the thing that's really crazy to me is that the reason they made Firefox was because Mozilla had become too bloated, right? And then Firefox has become more bloated than Mozilla ever was. It's crazy. And I don't know if Brave browser is any better than on those particular things. So... CFNAI, the most important and overlooked economic number. That's interesting. That perks my interest. Yes, Manchin won't seek re-election. Ponder's White House. Yeah, good luck with that one. Nobody likes you. Oh yeah, this is something I didn't mention, but basically the Chinese banks that kind of does all of the treasury trading was hacked and claims that they weren't providing liquidity to the markets because of that. But after they've been up, the liquidity hasn't really come back. So that's kind of curious story. You use thorium. Guess I'll look it up. I think I've been on like one of those binges where you want to pick up something new. Because I was looking at Linux operating systems. I think it was because it was recommended to me as a YouTube video for some reason. But apparently there's a newer distribution of Linux called NixOS that is basically all about creating reproducible builds. So there's just two files. One is the operating system configuration and one is the hardware configuration. And so you just go into that one file and change what you want. Like, I want this application in this application or this setting or whatever the deal is, and then that's it, right? Because it used to be that you would you'd go into it, You'd create a Docker container, install the operating system, make the changes that you want, and then save the container. And then like trying to recreate that might be like a big pain in the butt if something goes wrong, you need to go and change it, right? But this way, it's like just all in configuration files. And so if you're like, I don't know, it wasn't really built for containerization per se, but you know, if you're like if you're creating a bunch of virtual machines and installing Linux on it, this might be a better option for you. And I thought it was very, very interesting. So I was getting into that. Different web browser that might be. The fastest browser on Earth. It's a Chromium fork. Oh, it's the one that Raspberry Pi uses. Gotcha. Oh my gosh, it has all of these YouTube So by the way, so the guy that I saw was Chris Titus. That's funny because I searched for that, and he has the best web browser video. But then there's this other guy that says the best web browser isn't Thorium. Well, okay, we'll see. I've been happy with Brave though. I would say it's not perfect though. But I think some of my issues on my machine might be related to other things. I don't know. Probably just, you know,
from Moody's.
We get a new computer, will probably make things a lot better.
This year, Moody's analysts expect the pace of global economic growth.
You'd switch to Linux
with uneven outcomes across G20 countries.
You know, I haven't tried it in a long time, but I've just never been impressed with Linux desktop.
Price shocks, geopolitical
just never been impressed with it.
Rate effects are still key risks.
It always, like, it's, I tell you what, whenever you go down that rabbit hole, the first one that you run into is that they can't distribute true type fonts with it, right? So the first thing that happens is you start browsing the web and all of the text looks like crap. So then you go on this whole bender to try and fix your fonts. But I just don't think the experience is as good as Windows, man. It's not. Command line is a different thing. Server, a different thing. But even at that thing, the thing that so here's something that really frustrates me about tech right now. I don't think that the overall Linux, how do I put this? That I don't want to say the overall Linux paradigm. Okay. Because the overall Linux paradigm is a microkernel and then having everything as its own little module to kind of containerize the complexity. I think that that's really good. I think that having the open source kernel, that's been great. Okay. But what I don't like is, okay, when you install an application, some stuff goes into bin and some stuff goes into etc and some things go into, like their file management schema and just everything about the way that those things are managed, I don't think are very good. They were probably really great when Linux first came around, but the world would really benefit from somebody going back and questioning all of these assumptions and designing an operating system from the ground up for modern use cases. Right? But it's never going to happen now. It's like they're entrenched and we're kind of stuck with some of the decisions that have been made, right? Like GNU, there's, they don't make significant changes to GNU. Even though there's all these guys out there making stuff in Rust and they're remaking some of these utilities and making them like 10 times better, right? But you don't see much of a change to the GNU tools in your base Linux distribution. It's kind of wild. But apparently, when I was watching these videos, apparently the Linux ecosystem has changed a lot. Like, apparently Ubuntu is no longer really any good, and Red Hat went down like the path of evil. So basically everybody uses Debian now. Debian, and if I'm containerizing things, Alpine because it's, or is it Alpine? I don't know, because it's small footprint. So cool. But yeah, but I really like Windows for the most part. It's just that Microsoft will always come in and, they'll make this one decision about where they want things to go and try and force everybody into it, and we don't want to do it. And that's really annoying. But maybe they're starting to learn. Microsoft is getting better. After Steve Ballmer left, it's gotten better, right? I could see myself working for Microsoft now, whereas when I was a kid, that would be like apostasy, you know? And I got a bunch of YouTube videos to watch now. And those will all take up memory. But whatever. I knew this guy on my mission. He was always drunk. He'd say, doodah, whatever. Oh, yes. So what is the CF? The Chicago Fed National Activity Index. Let's see. Conclusion. While the media hopes for a no recession scenario, the data tells us an important story. Notably, the historical data of the CFNAI and its relationship to the stock market have included all Federal Reserve activity. The CFNAI and EOCI incorporate the impact of monetary policy on the economy in both past and leading indicators. Such is why investors should hedge risk to some degree in portfolios, as the data still suggests weaker than anticipated economic growth. The current trend of the various economic data points on a broad scale is not showing indications of recovery, but of a longer than expected recession and recovery. Economically speaking, such weak levels of economic growth do not support more robust employment or higher wages. Instead, we should expect that 2024 should be a year where corporate earnings and profits disappoint investors as economic weakness continues. I can come back and read the rest of that later, but I got the big takeaway. It's good. What? Are you seeing rumors on Reddit where I must only be addressed as Mr. Seth? No. Oh my gosh. This is where my like autism sort of, not autistic, but the autistic features of ADHD come in, where I'm like, I'm not 100% sure that he's joking, but I'm pretty sure that he's just joking. Now I'm like, do I need to pull up Reddit and search for speculator Seth? And you know, over the past, you know, let's see here, past month, have I been mentioned on Reddit? Probably not. Nope. People usually don't know. Well, when we're on the internet, I can't see like the intonation in your voice and your expressions. It's a ridiculous thing enough. But see, it's not like, I know that you're joking, right? But it's enough of there's like that part and behind me that's like, oh, people are talking about me. Do I need to go look? Okay, what do you think about trading based on intuition? That's a tough one, man. Okay, so like, I think that part of what happens. So what is intuition really? Here's what I think intuition is. Let's talk about what intuition first. I think that you have a neural network in your frontal cortex that is really good at, you send information through it, and then the cells reconfigure themselves based on the information that you give to it. And so you can send in a piece of information and it just immediately outputs the result that you need. This is very useful in conversations, to be able to interpret all of the various pieces of information that we need very, very quickly. That's the sort of a thing that a neural network is very good at. Another thing that a neural network is very good at is like being able to navigate the world. So like, you know, being able to see something and touch it and pick it up. That was something that was always very, very difficult for people to program and to work out. But when they use neural networks, the robot just figures it out, and it's a very, very efficient at doing that sort of a thing, right? But the whole thing about neural networks is we don't 100% understand how they work. like these, like Dolly and stuff like that. Like, of course, there's science about it, and there's a lot of things that we do understand about it. But there's also things about, you know, how it actually comes up with a picture that we don't understand, and that we're quite puzzled. It's like it just does it, and we don't completely understand, you know, because basically the program that you're creating is too complicated for us to understand. And that's what happens in your mind too, is it's doing something that's so complicated that we don't even really understand it. And that's intuition. You just you put in a piece of information and it just comes out. Okay? So using intuition is really very, very valuable. It can be very valuable in your life. But there's kind of some issues with it when it comes to trading. Oh yeah, thinking fast and slow kind of goes into this stuff, doesn't it? Not that I've read it, but from what I've heard. So if I have spent my whole life tracking animals, right? Then trusting my intuition on what direction I should go could be really valuable.
The market on open
Right.
imbalance. It's selling at 200.
This is where using intuition makes sense.
Open imbalance,
You
220.
know, a lot of business leaders, they're using their intuition, their instincts, their gut feeling, right? The issue with this in trading is it's all based on the information that you've sent in, right? You put in information, you're watching the market or whatever the deal is, right? And then your brain kind of does some stuff and it spits out an answer, right? Well, if all of the information that you were passing into it to begin with was just random, then the intuition that you're going to get out is just random too. So when you come in here and you watch the market with a real understanding of order flow, the empirical properties or stylized behaviors of order flow, understanding that it's orders that move markets, and analyzing what flows are out there and what flows cause this move or that move, and you're doing that for a couple of years, then you can build an intuition, because basically you know that your way that you're analyzing the market is based on an empirical reality, whereas the model that most people are interpreting the market from, like using technical analysis and stuff like that, is mostly random, right? So that's, I think, the real key is that you know, you have to develop your intuition, and if you're just using garbage information to generate that intuition, then your intuition is just going to be garbage, right? So there kind of is a little bit of a unique thing in trading, because you definitely want to build that intuition, but you've got to be careful that the information that you're using, that you're using every day, is solid. And you still kind of have to keep yourself grounded to the logic, which is to say that, like, yes, you're going to get intuition, but generally speaking, you're going to do better by really engaging those logical processing systems. This is part of why this coming through and saying, okay, what are the flows? There's this, and this, and are they buy or sell? And does that create an imbalance for us, right? It's a very logical process, and it engages those logical processing centers, right? And if you're relying primarily on that, and then sometimes intuition will come, where you kind of look at it and you're like, yeah, you know, but it seems to be doing something. This is where the risk management crowd chimes in and claims it can be profitable with an only 20% win. Yeah, I just don't, the logic that people have on this is kind of really weird, don't you think? That they say, like, basically, there's a bunch of retail traders out there saying, well, basically, you just need to stick to your profit targets and your stops, and you'll be a profitable trader. And it doesn't work like that. Like, you do still need an edge. You do still need an edge. was watching a YouTuber trader next door, and it seems like he trades based on intuition and experience. Well, maybe he does. Yeah, I mean, I think the thing is that it's entirely possible that somebody could be trading for a really long time and does just build that intuition and could do well with it. But problem is how do you know that they're actually doing that, you know? So one of the things is that people interpret results differently, right? So when you talk to me, I come in and I say, well, you know, there's a couple of things that I'm unhappy with. I'm not really feel comfortable sizing up right now, both because of recent performance and because I don't know if I'm really in a place in my life to do that. Maybe if there's an opportunity I identify that seems really solid to me, I would size up on individual trades or something like that, right? But most of these people that you see on YouTube that are like really talking themselves up and stuff like that, they could have experienced the same results as I have and consider themselves massive successes, right? That's the thing, is that some people, it's like they'll have a period where they, you know, like they had a year where they were making money. They've made it. They're a professional. They're, you know, and then they go and they blow it all and they just say, well, I just made a mistake, but I'm still like really great, you know, because they don't know the longer term performance. I know the longer term performance. I know that I have to perform over a period of 5 years, and that there's fat tails. So like if I'm doing really well and then I lose it all on one big trade or something, then that like kind of defeats the whole, you're not actually doing well, you know? And so there are many people out there that hold themselves up as experts, even though they've had less success than me. It's kind of a funny thing, right? So is this kind of like, you know, somebody could be claiming that they're doing well, but then if I actually looked at their stats, I would come and I would say, no, they're not. You don't want to do what they're doing, you know? Yeah. Like, this is the argument they give you when you tell them that TA is not better than coin flip. But then if it's all risk management, then why bother doing TA at all? Why don't you just do a coin flip? Yeah. Yep. Yeah, no, Uzi, you totally got it right. Like risk management is like the bare minimum. Risk management is the bare minimum. And to be fair with you guys, the risk management strategies that we usually use as retail traders can hurt you. Okay? Like just having a set target and set stop and for all trades will hurt you. It will make your results more random, essentially. Right? You probably want to have a risk management strategy that gives you some opportunity to have far right tails, which is to say that when you make money, you make a ton of money, right? So that's why these things like trading multiple contracts and taking some of them off, I want to go short, I'm going to scalp the range here, build up a profit so that my stop is my break even is somewhere above the high, and then just try and let this one ride. Okay, well there's fat tails involved in that, because I could just stop out on all of my contracts right away. That happens, and that really sucks. And if that happens a few times in a row, then that can destroy your account. Okay, so there is a left tail on this, right? But there's also a right tail on this. You might have a situation where you get to hold this for multiple days and just make 20 times what your average loser is, right? So a lot of the things that we say about risk management are not actually helping us in the way that we think. Like, I like to do all in, all out. I like to, just trade one contract and have relatively set, you know, like if it goes a certain amount against me, I'm usually getting out. But, you know, and I want to try and get at least 10 ticks. But you notice I'm always trying to let it go further than that. Right? And that's because I know from all of my backtesting that if you just have set targets, it actually kind of makes your results more random. So yeah, risk management is not what it is built. And I'm not even sure if I really have the key edges that would really give you an edge with the risk management side. I'm sure that there's probably more sophisticated ways of managing my positions. But, well, I think they don't realize that risk management is not only what you do after you open a position. Entry is part of it too. Oh yeah, for sure. Yeah, and again, like the biggest thing that retail traders don't seem to understand is fat tails, right? And I see that even with some of the educators out there that I really respect. So they'll talk about, okay, well, we're using this stat because it's a Gaussian distribution. We only need 50 samples. That never works in financial markets. All financial markets are basically always fat-tailed, you know? And so they'll do this sort of a thing where they'll say like, using this risk management strategy, we tend to average this win rate. And that win rate tends to be higher than, you know, what would be break even. And so they say, see, so this is why it's our profitable strategy and most of our traders do well with it. And the problem is that their traders will blow out and then they don't count that blowout day. And so actually it is break even. It's just you don't see that it gets to break even until you get to the fat tail. Is an open reversal a technical analysis or is it a setup? Well, okay, so like, I think that a lot of people try and do this thing where it's like, I will look at the opening range and based on what it did in the opening range, I'll make my decisions. But look, it kind of depends on what you know, what your definition of technical analysis is, right? Because there are some things that I can tell you about the market that are like purely technical. But there's kind of reasons behind it too, right? Like the vast majority of the volume in the stock market trades within the first hour and the last hour. And the last hour is actually usually more volume because that closing auction, you can get a lot of liquidity executed in that closing auction. Okay. Right. So, like, there is a thing to in that first 30 minutes to an hour, it kind of does certain things. Well, yeah, because that's like when there's the most activity. Doesn't necessarily predict what's going to happen for the rest of the day, though. You know? And again, a lot of it is like just misunderstanding of statistics and stuff. Misapplication of statistics. You know, I said wasn't interested in the action so far. We had kind of like a gentle move up, followed by a little bit more aggressive of a move up, and it very quickly topped off. We've come back to basically where we started at. So this is the low of the regular session, but it's not the lows, right? It's just where we opened up at. We're much lower than that earlier in the overnight session. Now we've got a liquidity hole at 24. So I'm seeing a situation where we could potentially continue to sell, but I don't know if we will actually get too much from it. The price risk here isn't really very good unless it's just gonna like really break down. But I say the key thing that that I would caution against, what I call technical analysis, is looking for a pattern in the price movement as an entry condition. That's the key thing that I would consider technical analysis that from all of my research suggests is complete nonsense. Price is really quite random, and trying to say that we formed a higher high or there was something about this bar compared to the previous bar that was it's all nonsense. You're random. You're just looking at noise. Because everything that we know about the market kind of suggests that the price is BS.
Fed's boss Dick
It's
says
just a function of the orders that you put into it.
at 1 spot 2% to 1 spot 5%.
The amount of informational content that you can pull out of price history alone is very low, especially on an intraday time period. The amount of information you can glean from analyzing a single price series on an intraday time frame is practically nothing. Yes, I did just hear that on my news squawk. So is Bostic... Oh, yes, he's been speaking since the top of the hour. By the way, this is not actually a No News Friday. We have, at the top of the hour, we have University of Michigan numbers. So that, sometimes this is one of those things with ADHD. It's like I should be coming in every day, making sure I know what all the pieces of news are, but sometimes I just forget. But this number includes 1 and 5 year inflation expectations and so forth. So this is something that is likely to move the market when it comes. And as such, I don't necessarily want to be taking positions here in the next 15 minutes. Otherwise, we're going to get stuck in that situation again where I'm in a position. And although I wouldn't mind being long into it, I wouldn't mind going long. If I had to make a bet on it, I would be going long interest rates, short. You know what? Let's do it for kicks and giggles on our sim account in the treasury, just so that I can say that I did it. Hopefully I get filled there, because I really wouldn't want to start my position below 24. That would suck. Okay, there you go. That's good. Thank you, sir. Thank you. See, this is why I have you guys around. Keep me focused and remembering what's going on, and it's collaboration, right? I really wish, we could try it again sometime, but I wish that I had somebody like here in the room with me, and their focus was like risk management sort of thing, right? They could be my risk manager, and and they could be watching this when I'm talking, and I can kind of bounce. I think that would be really cool, but I don't think that's ever going to happen. Commerce Bank. Silver should profit from green industrial demand. Okay. Feel kind of itchy today. I think it's because my brush that I use to brush my beard kind of was a little staticky. They're gonna do this. There's no way they're gonna film me at 24 now. Is there? Even though they spent so much time there before. Okay, well, while we're waiting 10 minutes here, what top? So the first thing that I see on Reddit from r/day trading, what is your mental hurdle? Okay. This is the, it's kind of interesting because this discussion we're having about risk management, because I'm starting to see this sentiment more and more from people in the retail trading community, right? This is that there are all these people that say all you got to do is manage risk and have good psychology and you'll make money, right? That's kind of like the, what is the Mark Douglas way, as they say, once I just started managing my psychology, I had success and all of this sort of thing. Nah, I think that what happened is you were just doing it long enough that you had a lucky streak. Like, I really don't think that your psychology alone gives you this edge, and it's always based within the context of using technical analysis. Yeah, if you're using technical analysis, then you probably would think about psychology a lot, because anybody would go crazy when you're trading something that is really, in reality, just random.
Yet to come. And keep in mind now we're 10 minutes away from the top of the hour, where we get the University of Michigan Sentiment November prelim. Forecast is 63.8 off the prior 63.8 as well, with a range of 68 to 61.5. For the University of Michigan 1-year inflation expectations, forecast is 4%. Seeing more comments from Fed's Bostic says the Fed is well positioned to let things happen. So again, Fed well positioned to let things happen per Bostic.
Okay, can risk on risk off gauge be used as a predictor of future cash flow?
Inflation expectations, which are 4% off the prior 4.2%.
So
5-year inflation expectations.
I would have to look at the individual metric that you're talking about, but my guess is that gauge would just be based off of different assets that are moving that day.
Spot 3.
And so it would probably be like a lagging indicator, okay? But like a better way of approaching this is like sentiment. Sentiment can be an effective predictor of future orders. The problem with sentiment indicators that we get, number one, is that there is a contrarian nature to it, which is that when the sentiment gets too high or too low, that actually predicts a reversal. And two, that the sentiment indications that we do get, they're like calling people and asking them about the market and doing a survey and stuff. So like by the time that we get it, it's already like old news. So there has been a lot of research recently where they'll go on like Twitter and they'll gauge people's sentiment based off of what people are saying on Twitter. Maybe it won't work anymore because there's less activity on Twitter, but whatever. Using social media as a gauge of investor sentiment has been shown in many studies to be an effective predictor of future orders. So I kind of come in and will use sentiment in my trading, but I'm guessing what sentiment will be. I'm basically saying to myself, well, based on what happened yesterday and everything that's going on, what do I think people will feel like, and therefore what they will do. Like, I think coming in today, I think that sentiment compared to yesterday is probably severely damaged, especially here in the treasury market, where the treasury market just got this huge wake-up call that the market is still having trouble absorbing all of the supply coming from the government with such a terrible auction yesterday. Oh man, you missed it. Oh, but you were there in Discord last night, so you know what's going on in bond world today, right? You had an auction, it was really bad, and then Jerome Powell was also hawkish. Yeah. And yes, for me, like especially on like the midterm, it basically turns me into I only want to sell. Hey, I got a contract filled. Okay. You can add another one if they get me in at 24.5, but Kind of looks like they maybe want to push lows before the news, huh? Okay. Okay. Well, let's see here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay, got a wheeze to go if I'm gonna. We'd have to come down to like here before I probably would take the second contract off. By the way, are those DOMs on the bottom there tradable or just for you to track the bond? Oh no, I usually put most of my live orders in this DOM right here. In the 10-year. That's where I'm live trading. This one, the 5-year, it's kind of like a waste of space, isn't it? Like the 5-year is just never is such a disaster. Like there is liquidity that's put out there, but because it like never changes, it doesn't, my DOM doesn't know where to reset to. And so it doesn't, yeah. Pretty wild, right? So I just want to reiterate, and for anybody that's come in here, we have news in 5 minutes. So I was wanting to go short or long interest rates, short treasuries today. But I thought that the beginning action was pretty lackluster. Now that we're so close to the news, I don't want to have a live position on. But if I was going to make a bet, I think that it would be betting on higher interest rates after this Michigan number that's about to come up. So I'm taking it on sim. So what I'm doing here in the 10-year, that's a sim trade, and it's a degenerate sim trade. Okay, I'm building a position up going into news on speculation. Okay. Yeah, the ones at the bottom are micros. I really love trading the micros, I have to say. Like, it's just taking teeny tiny amount of risk. I love it. It's so much. I've done so much better once I started trading the micros. When I think that the full ones were just a little bit too stressful, you know? It's $1. So literally one tick is $1. And like an average move is 10 ticks. Yeah, be right back. I gotta like blow my nose here. It's really starting to itch me. What are the commissions? It's basically it's equal to a tick. It's just like what it is in MES. Essentially, you have to make one tick to make up for your commissions. I saw somebody, it's a comment that I've always seen from the beginning, but I hadn't seen in a while. Somebody posted on one of my videos yesterday. Yeah, but the commissions are so high that you lose all of your profits from the commissions and stuff. And I'm like, yeah. If the commissions are what's killing your trading, then maybe I just can't imagine. You can't make more than one tick. Or like, let's say you have a 50% win rate. That means that you need to make 2 ticks to pay for the extra commissions, right? You can't get 12 ticks out of a move. There's probably something else wrong with your strategy. Yeah, the commissions on futures isn't much. I mean, it used to be that for stocks, what you had to pay in commissions really was like you were very unlikely to have success trying to day trade stocks without the 10,000 or whatever it is that you need for you to be a pattern day trader, you know? But yeah, here in futures, and especially treasury futures, man. Oh, I'm sorry, it's 25K. But treasury futures commissions are so darn cheap, you know? Treasuries, you can make a profit off of just taking one tick. Yeah, the bonds, well, I'm wondering. Well, so we're right at 4.6. I'm wondering if other people, well, you know what happened was that I went short and now you guys are all doing it too. That's what happened. I'm the axe. They're all following me. I said it's worth speculating going into this news, so they're speculating short. I mean, I have to think that's what it is, because you notice that it's moving down on really very little liquidity. Okay, so now 1 minute ahead of the news, you can see the liquidity almost completely pull. The meta order. Well, yeah, I guess you could say it is a meta order, but it's a very small one, right? Yeah, there you go. Pre-online brokerages when you had to phone the broker and pay. Yep, exactly. I really hate it when my nose. I'm one of those things about you being if you're ADHD is that, like, if you're uncomfortable, if you have an itch, if you're not sitting, like, you can't stand just like sitting there still. Like, you have to. You just can't stand it. I want to make myself comfortable, and I'm like, because it itches. It's just really. Ugh. Okay, so here we go. Booyah. Okay, 4.4 versus 4 and 5, 3 spot 2 versus 3, so that's gonna hurt them for sure. Curious. So their spread opened up there in the micro, and I was like, oh, 4.6 is a spot I'm interested in. And actually, there was some trade that happened right there at 601. It looks like they might completely retrace this, though. So let's... Oh, yeah, AO, I use tick aggregation. So you notice how I'm not doing every quarter of a point. I'm just doing every point, and that's why my ladder looks more liquid. It kind of gives me a better high-level view. That's why I do it that way. Okay. And they're falling back down. I'm feeling like I was a little too stingy there. Well, okay. So that was a pretty darn good fill. You know, I like to see it fill and then immediately have some stack on top of me. That's great. Of course, you know, it might come back and not hold, but just on like the very short term, yeah, that was pretty good. I do think that based on the news that we got and everything else that's going on, that we could see more extended selling in the treasuries. Let's see if they try and make it towards the overnight lows, which is kind of down at like 12. So here they're back at the low already. On this one, I'll take one off at 16. Obviously, if it comes back up here, I'm not going to get filled on that, so I should cancel that. You had great trades yesterday, but now you can't get anything. Well, it's been a little bit of a mess so far today, but I think we're getting a good flow right now. You know, in the 10-year, it's like it's not even really getting started. On the 5-year, it's really going. Okay, so that's the first thing to note, is that this move down, we've seen flattening. Oh darn, they didn't decide to extend the lows there quite yet. They may yet come back to it, but they're backing off for now. It's a little disappointing. Okay, there's some icebergs on offers. So some evidence that the selling flows are still there, taking advantage of the upside. Dollar's moving around quite a bit. The Japanese yen seems pretty correlated with it. Gold pretty correlated with it. Maybe I am seeing, I don't think this is related to the news, but I am seeing in oil overall, like some buying today. So S&P 500 doesn't look too concerned about it yet, but they might start to fall here. You know, it's only like 5 points so far, but it's looking a little bearish on the E-mini. Will we see? Well, there's the dollar moved a little clip, and that really pushed the treasuries down. So they got a little bit of momentum there now. Let's see if they can break 18.5. There's still a little bit of pushback there, actually. I'm not sure the way that I'm seeing this right here that I would read that as an opposing meta order. Well, maybe 25.37, that could be an opposing meta order, but I'm betting that it is actually some profit taking. Because, you know, there was all that selling going into the news. Oh, sometimes I read your guys' comments like too quickly. Great trades on CL yesterday. Now I can't get anything decent today. They are a little bit up, but there's a pretty wide range in CL. This is a little noisy over there, huh? Yeah, micros are excellent. Gives you the exposure to learn the instrument you're trading without the increase in, yeah. And like really, micros are sized so small that it really becomes viable as like just a hobby, you know? If you're trading micros is actually a cheap hobby compared to most hobbies these days. I went to use my pen. I haven't really used my pen today. I see it, I hold it all the time. It's fun. It's fun to write. The quick brown jumped over the lazy dog. That's not terrible. It's legible. You can read that, right? It's somewhat legible. Oh man, it seemed like they were just about to go in there and they pulled all the way back again. Too much of a hole here. Are actually kind of threatening to put me underwater now here, huh? You know what? On this over here, on this full one, if I get filled back up there, I will take it. It kind of seems like they just having a really hard time staying above 4.6 for the moment. Oh my gosh, it's the song. I hate that one. I mean, there's some cool things about it, but the this just too much for me. It's just too much for me. Too cheesy. Let's see here. Row Writer on Twitter. Over the last 3 days, U.S. enforcement officials have warned of a coming crackdown on Chinese-controlled crypto entities threatening national security. Today, Justin Sun, a Chinese national in control of a huge percentage of the crypto space, has been quote-unquote hacked. Oh, what's this? Justin Sun's Poloniex exchange was suspected of being stolen, and the loss of assets may exceed $60 million. Oh, yeah, dude. That's... oh, my. Okay, because often the way that it starts is the guy running with the money and then claiming it was stolen, right? Or employees running with the money. So that's... well, Bitcoin is not reacted to it at all, but that is something, if I'm in the Bitcoin space, I would be keeping an eye on. Ooh, I want to read this too. A look at the SEC's rebuttal of Binance's motion to dismiss. Yeah, always look internally first. It's almost certainly an employee, or if not, Justin Sun himself. And I mean, this happened when FTX collapsed, right? They said some of it was stolen. Yeah, okay. When I'm reading my Twitter chain over the last 40 minutes, it's mostly Bitfinex talking about that. So, okay. So by the way, part of what happened here was that the dollar did slump back down to where it was. So. What I see right now is we're in a liquidity hole again, so we'll see if another wave of selling comes through here. I think probably it should. I'd say it's not being the easiest trade. I thought this was just going to be an easy one because I made 10 ticks like right away, right? But it's actually turning into quite a frustrating trade, so... okay, yeah, now that the treasuries are starting to go down, I'm starting to see some selling in ES. They're running into an iceberg at 43.75. How big of that iceberg do you think that'll be? Because believe it or not, like 5,000 at a price in ES is a relatively large iceberg. Okay, iceberg 21 in ZN. Yeah, that's true. Alligator says, so we're talking about China's largest bank hit by ransomware attack, ICBC. And I was saying, oh, that was all fixed yesterday, right? But Alligator says it seems that their client orders were not all processed. Problem with that is that I would expect their client orders to be sells, so... So far doesn't seem to quite be doing what I want, and I am seeing the dollar drop a little bit more there, which I find incredibly curious. But I was going in on this based off of, well, first because we were above 4.6. I really wanted 4.6. But also because the inflation expectations were much higher than anticipated. So to see the market trying to ignore it here, I think is a little curious. I'm kind of not sure where that buying would come from. It looks to me like right now that the movement that I'm seeing in the treasuries is largely the treasuries following the dollar. So the dollar might be doing its own thing, but the dollar might be selling off just for like, well, I don't know. Usually you come back to the dollar for the weekend. I'm not 100% sure what's going on there. There is a little bit of a divergence there because the dollar fell down quite a bit. The treasuries are still pretty close to where they were. TLT had a good bounce up off of 88. Where was you guys saying that they would want to be? 87.50. Above 87.50 is optimal for dealers. So what Alligator was saying in Discord here. Where are they at right now? Let me come back in here. Oh, yes, they're perfect. I still have it open. Oh, well, they're pretty likely to stay above 87.50. Even if we got a really good push down, I think that they would still close above 87.50, so... That last little jump up there kind of looked like a little bit of covering to me. Let's see, the dollar's coming back a little bit, so we still have a chance. We still have a chance. It's definitely, having been in here now for 17 minutes, I'm a little frustrated though. Because I'm hoping to be much lower by this point, so... And it is flattening, which doesn't particularly help my trade in the 10-year. Should probably do it in the 2-year, right? Yeah, I'm just watching the tea leaves here in this area, and I'm not getting a whole lot at 21.5, but it does keep kind of gapping up a little bit to 22.5, right? So I'm not too happy about that. And see, it's like it's moving through this whole area like really easily. Maybe I probably should have tried to build my position in the ZN out here better in this area, but I don't know if it was worth it. Would have been worth it if I'm doing that. I think it's probably better to try and let this just ride. Certainly, it could have waited a little bit longer and built a better position in the micro, though. Yeah, dollar is just not cooperating. It may just be a lackluster Friday and the sell that I want is just not coming. Because now they're even starting to hold 22.5. And the cumulative deltas in ZN are a little iffy here. I'm getting to the point where, like, when I see it, it's like, I want to hit them. I want to be like, I want to hit that so that those bids will maybe evaporate, but it's just not happening. Take profit? Well, so the thing I'm asking myself now is, what do I need to see to really get me to stay in or get out? Here's an inside day as well. I don't know. I'm still stuck at that. I feel like that the bad auction yesterday and Powell and now inflation expectations being higher than anticipated are all things that should lead to pretty decent sell order flows. But the thing is I'm not seeing as much selling at this moment as I would like, but there's a pretty bad liquidity hole here too. So the sellers may just kind of be waiting for there to be more liquidity, because honestly, if they were really selling it aggressively here, there would, you know, it would just, they wouldn't be able to get very many contracts filled. So I'm trying to give it some room here. And you know, we are only stressing out over 4 ticks here, right? So, oh, there's an iceberg at 21.5 on the offer. They're able to trade that pretty quickly, though. Yeah, and then it definitely looks to me like the 5-year is the ringleader, right? When did that big order at 21 get there? Is that just the liquidity, you know, kind of rolling down and got left there? Seeing very little option flow. And that little move down that we just had to the lower end of this range in ZN may just have been the dollar reverting back up here, right? Although it does kind of look like the dollar might want to try and push a little further. Let's see. One of the things that kind of sucks is that, like, I did have 10 ticks favorable at one point, but there was no way I was going to take it off at that point. Take up. We really are like talking about 3 ticks here. Since basically for like the last 15 minutes actually. See, if I had gotten like 4,595, I probably wouldn't be very stressed, right? Or if I was just holding this one up here, wouldn't be very stressed. Okay, there the dollar just broke through a little bit. And I can see the Japanese yen turning down again. I think a little rally in wheat. I'm also seeing there was a little bit of a buy when we like flipped back up there to the highs in the cumulative delta, and it is very aggressively turning back. So there actually is some mildly aggressive selling here. Although I think that was mostly from the dollar breaking out of that 105.74 area. Yeah, it's just trading the dollar here, man. Like, the treasuries are heavy compared to the dollar, but it seems like the reason it's really not going is because the dollar is just not moving up. Okay. Okay, whoa, what the... Okay, that was a big change, and I didn't see any change in the dollar on that. But we just got like, oh come on, there's a little piece of lint floating in the air I want to grab. That was just like 5 ticks down, 6 ticks straight down, and not on a, holy crap. Oh, I don't know about this. This is so now I am getting what I want, but it is not happening the way that I thought. I thought that, you know, we would build the liquidity up, we would sell, but you know, it would be relatively thick. But they just dropped it. It just, there wasn't very much, there was hardly any liquidity supporting that at all. I'm not 100% sure what was with that. Yeah, the dollar, well, the dollar did move up a little bit. And should also note that this drop in the treasuries happened across the curve. There was not steepening or flattening on it. They all moved down almost equally. So that is extremely curious to me. In fact, it looks like the 30-year may actually be trying to push a little bit harder than the others at this moment. Could this steepen back out? I think that falling down and the yield curve steepening kind of makes a little bit more sense to me, but... Right, it was steepening when we were in October and it was selling really, really hard. We were steepening, right? So... Okay, so it ticked up, but there was more liquidity on the offer than we've seen on any of these bids. 1724 versus, like 800 on the other side. And the dollar is still kind of pushing back up, maybe looking at breaching its local highs. And they fall at 20 on hardly any liquidity at all. And you're starting to see some like 3000s stack on it when it ticks down. Well, it's pulling, but there was a 3000 kind of playing there at 20 half. Okay, nothing for it to tick up though. There you go. See it right there at 21. A lot of positive delta coming off of 19. Yes, so you're correct. Let's not say positive. Let's not say a ton. But it was about 10,000 contracts net from the lowest of cumulative delta after the news to the highest in cumulative delta after the news. Yes. Kind of in the broader context of the day, kind of just looks like a blip, though. I'm kind of looking at this more recent one. There was like I think that what happened here was like, well, let me see if I can kind of try and explain this a little bump that we saw here. So this is probably like splitting hairs, but like you see there was a jump right here when we moved up, and then this has been like them all just selling and the liquidity evaporating out from underneath of them as they try and get rid of it. That's what that kind of looks to me like. Somebody committed themselves long right here and is puking it. It's just a theory. There's no way for me to really know that for sure, but based on the deltas that we saw, that is a possibility, essentially. Oh, are we at the end of the playlist? Yes, we are. There we go. Well, just remember the low is 18.5. 2 more ticks down to maybe get there. And you can see the dollar is pushing towards its highs. So, the dollar correlation was a little weak here for a little bit, but they are catching up, and it looks like the dollar maybe wants to go higher, and we'll see what the treasuries do. Given the way that this is kind of all played out, I think that if we do break 18.5, we could probably see some stops. So, feeling hopeful about our opportunity for a flush. Throw on to now, just stream beats because YouTube seems to complain about everything else. Yeah, and Juno Beats opened up their whole catalog on Twitch, but not on YouTube. So otherwise, I would just play Juno Beats all day. That'd be great. But I heard a seller and the guy he's got that does the music for this, they did a good job. These are good tracks. They're like for a stream, they just got the right they just have the right vibe, you know? Hmm, 30 years not quite cooperating here. I see what's going on now. They want to sell it, but they know that I'm long interest rates, and so they're going to wait until the stream is over, and then they'll flush. Well, I tell you what, mister, I will hold it, even after the stream, on the anticipation of a further flush. So you might as well just flush it now. Might as well just flush it now. Flush it now or stop me out. Well, I guess another thought that I'm having right now, because again, I'm looking for like, oh, you know, if we breach 18.5, maybe we'll start to see some stops now. Seems like we could have built some of that up. But actually giving it some more thought and thinking about what's going on here, I'm not sure that there are that many committed people in here right now. Which is maybe why the dollar is being so dominant. I mean, the dollar is dominant all the time anyways, but right now it's the thing I just keep thinking is, man, this is really frustrating that I feel like I'm just trading the dollar, right? But we are higher in delta than we were last time in here. So if we did extend below the lows, I would think that the delta would probably try and catch up, you know? Well, we'll see. Looks like there's an iceberg in 19.5. I'm kind of thinking, actually, yeah, let's do it on this one that we're managing over here. We can take another contract off. That way, if it does bounce on us again, I can try and I can still do something there, you know? Another thing that's frustrating is it came down here so quickly, you know, but it just didn't go. I don't know. They might be trying to create a higher low here, sort of a thing. Certainly what it looks like in the 30-year. Yeah. Damn it. Well, so at 21, remember at 21 that we had had a big order that was kind of stacking there when we'd gotten below it, but it hasn't really played a huge role at all, has it? So that is kind of like spoofing somebody maybe trying to push it down here, getting it to go. It just doesn't seem to be that it wants to do it. Seems like we're still relatively light. Oh yeah, and the dollar did fall back there, didn't it? Okay. That one was curious. So there was a couple of guys clashing into it at 20.5. Like when 21 went offer, they immediately hit into 20.5. Apparently at 20.5, they need more than 4 contracts for those guys to pull, though. Okay, that's a little better. Whoa, okay, now the 30-year is starting to go. You see how I'm in this mode where like I'm overanalyzing every little change? That shift towards the 30-year kind of leading the down, though, I think is a change that could be really beneficial to us. So maybe somebody's putting on a steepener trade. I think that would make sense. Well, I got about 20 minutes left. Been in this for 40 minutes and it's still break even. I still have more favorable excursion than unfavorable excursion, don't I? That's close, though. It's been pretty random, so that's not... I'm getting close to the point where I may need to just cut this loose. I'd really like to just hang on, but you know, it being a Friday and everything, I don't know if that one's really likely to play out well. And again, the dollar is just not cooperating, is it? Okay, here's the S&P 500 is maybe breaking down now. Yeah. Although that may actually be leading to treasuries buying a little bit. What I'm seeing in the treasuries right now is that the volume has pretty much gone flat, and we've got a liquidity hole at 21. So now it's 45 minutes past the event. Maybe liquidity is recovered enough that you would see big players want to come back in. I guess I could give it another 5 to 10 minutes. At the moment, though, I'm not feeling very hopeful about it. I'm not so sure that this is just, you know, them waiting for the liquidity to come back. This kind of looks like a market that's just dying down. made their money on the news and now they're ready to go home. Come on, Dollar, you can do it. I know you can. Let's bust 1058. Yeah, I'm overanalyzing some of these ticks because the volume is still flat. Does seem like the bids are being a lot more solid here. Like there, they got it to go bid at 21.5. Not for long. I think the market makers are probably loving this. Yeah. And there's the S&P. Maybe found a little bit of a temporary floor. It's flat in the 10-year, but it's not in the 30 and the 5. They're buying. Okay, well, we're basically sitting right on the buyer's average position, so you see this, right? We moved down, where did we go right to? Seller average cost basis. Yeah. Oof. I did not like that. So I'm seeing the micros. Some people are doing stuff in the micros here now at around this 4-6 area. Curious. It upticks, but they can't seem to hold it at 4.6. So nobody sold it or anything, but the bid just like bid was only there briefly. Like there's 10, see, and then it disappeared real quickly. No, nothing's really changing up here. Well, there they lost 22, so maybe. Yeah, okay. Will be many people willing to buy and sell at 4.6, apparently. You know, this has kind of given me a thought. Guys, I got a massive thought. Okay. Okay. Mm-hmm. We got a little bit of selling there, but I'm honestly still not too impressed by these flows. I do very highly suspect that once we're done with this stream that something will come through and they'll sell it the rest of the day. That would be like so classic. So I have to give up on it for time constraints and then it goes. Okay. So I took -3 onto that. And now you can go and flush it. Okay, so here was the thought that I was having. Your typical technical analysis will be like, here we're in this range here. I want to go long with my stop right here, right? Like, or actually maybe a little bit below the low, right? A little bit below the low. I know. Well, because the news was bad. Yeah. I think that you could see a lot more selling in the treasury market. I think that I'm really concerned about the treasury market here. But apparently the market isn't concerned enough on a Friday to do anything about it. So that's fine. That's fine. Might have been able to break even on it, but I'm going to play that game. Okay, anyways, what was I saying? Okay, so you're like, I want to buy here. I have my defined risk down a little bit below the low. I'm expecting these lows to hold eventually, right? And that it go higher, right? And so that's the technical analysis setup that they do. So basically, what are you doing when you set yourself up in a trade like that? Well, what you're doing is you are setting your stop up in a location where the liquidity is likely to be problematic, let's say, right? Because you're saying it's defined risk, and I think the probability that it touches that is low. That it's more likely that it touches this than that it touches this. But what I'm saying is, wouldn't it be better if you could stop out into the liquidity, right? Because you don't want to have this thing where it's like it's going and then you're chasing it, right? That really effing sucks. So instead, you have it like in this area right now where it's 21, where we've traded forever and ever. And if that's where your stop is at, then at least you're stopping out into, a place where it's easy for you to get filled. But maybe that's too likely of a spot to trade. Yeah, there's that 21 stacked up again. Started to go, and I'm like, oh, is going to do it before I go here? And after I just gave up on it, but it came back up there. So I know that you're actually seeing the liquidity get a little bit better here on the bids now, right? I mean, yeah, there's these two. There's these three, but then past that, it's... I think it'll be really hard for them to get back to lows. I suppose that they could very easily do it if the dollar decided to jump, but... I think I'm giving up on it. Yep, I've given up on it. I should do the same over here, yeah? Because I've been waiting to get that fill at 19.5 for a while, and they ain't coming anywhere close to that. And by the way, when we were at the lows, I was only +5. You say that the dollar should get weaker here? Well, that wouldn't be good for my trade. I'm super bummed out about that trade, but it wasn't a bad trade, was it? I got some pretty good running with it. It's just sometimes it doesn't, and usually it's when it's a Friday. Sometimes it just don't work out. That's okay. I didn't really lose a ton on it. Only 3 ticks. Might have been able to break even on it. But look, I'd be down like almost 10 now. Oh yeah, because the 30-year pushed a little bit higher. So I think I got about, if with missing the profit, because obviously it didn't run as I thought it would. So I could have taken 6.5 or 6.15 rather. But that just wasn't even, because at that point I'm like, oh yeah, it's gonna keep going, and then didn't. When it popped back up, it was too fast, and I'm like, I'm just waiting. Okay, so I missed that opportunity. Where I got out was about as good as any spot. So I actually think that even though it was a small loser, that it was a pretty good trade. And I've been feeling pretty good about most of my trades and how I've managed them this week. So it's good. It's good. We're getting better. We just need to be a little bit more lucky. Huh? Are you guys have been superstitious, haven't you? You like wearing this. So it's one of you wearing like the same shirt every day or something like that, because you know that being superstitious is bad luck, right? I don't need any of that in here. No superstitious stuff. If you notice like some sort of strange correlation that shouldn't actually exist, like every time that you wear this shirt you do really well or something like that, just cut that out. You can't wear that shirt anymore. If you think, the instant you start to think something is lucky. So this is, being superstitious is bad luck. You think that this order at 22 is ever going to get filled? Kind of seems like no to me. It's like, no, we're going to punish you all the way, Seth. That's fine. I'm willing to stop out at 24. You force my hand. There's the top of the hour. All right, guys. Well, it sucks, but I think that we should have plenty of opportunity in the coming weeks. So, get some good rest. Be productive this weekend. Get all your stuff in with your family and everything. And I will see you guys on Monday. In the meantime, stay excellent, team.